We just struck gold, making over 100% profit as Equinox gold stock soared 15% after earnings to a new high. Now, a lot of people are asking us, are we closing the trade to take profits or staying in for more gains? In this video, we'll answer that by taking another look at the data to see exactly what the wealthy investor we've been tracking is doing. And not just any wealthy investor, a smart one who led us to this winning trade. If you've been following our work or subscribed to our channel, you'll know that just before Equinox Gold reported earnings, on this day, August 13, we shared an unusual trade made by this smart, wealthy investor. This was the video that we posted on our channel just one day ago before earnings were released. We analyzed a 2.6 million options trade to help determine whether to buy or sell Equinox gold stock before earnings. And after analyzing the data, it was clearly flashing a buy signal, indicating a potential stock rally. So we entered our bullish trade based on our analysis, and as it turns out, that analysis was correct and highly profitable because Equinox gold stock popped to a new high, so that trade has paid off big. If you want to learn how we predicted this stock rally, we'll link this video at the top. Make sure to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, keep in mind, even if you're subscribed to our channel, you could still miss out on these profitable trades. That's because we don't always have time to make a video. We spend most of our time analyzing data for the exclusive trades we share inside our membership. That's why we use email alerts. They're the fastest way to share trades, even when there's no video. And so, this was the email we sent out to our newsletter subscribers when we first detected this unusual option activity on August 12th, before earnings were released, and back when the stock was trading at $6.74 per share. And now it's much higher, trading at $7.82 per share. So if you want to start getting more profitable trade ideas like this, sign up for our free newsletter on our website. We'll put a link here. It's simple, quick, takes less than a minute, and best of all, it's completely free. No credit card, no paywall, just raw data-driven trade alerts based on unusual option activity, emailed straight to your inbox. And if you want full access to all our trade alerts, including real-time updates, detailed analysis, and earlier entries, consider joining the membership. Members get earlier access to trades like this before anyone else, even before we share it in our free newsletter or here on the channel. So if you're tired of being late and want more time to act on these opportunities, this is your chance to get direct access to the trades of wealthy investors and potential insiders, so you can see what the smart money is doing before the trade becomes highly profitable. Now, how much profit did we actually make from this trade? If we had simply bought the stock by using shares, we'd be looking at a solid 15% gain in one day from the earnings rally. But because we used call options instead of just buying shares, our profits were even higher, thanks to the leverage that options provide to amplify returns, capturing even bigger gains. And so, let's take a look back at our original trade, analyzing the same options that a smart, wealthy investor was trading as well. It was for these October 17th options at the 7.5 strike calls. A quantity of 74,856 contracts were traded, so that's why this trade was so unusual. And it was initially priced at $35 per contract when we entered the trade. Keep in mind, this shows option prices, so we either move the decimal 2 places to the right or multiply by 100, since each option contract controls 100 shares of stock. That means each option contract costs $35. And so, let's take a look at how much these options are worth now. As we can see here on the option chain for the October 17th options at the 7.5 strike calls, these contracts are currently worth between a bid price of $80 to the ask price of $85. And remember, These options were only going for a price of $35 each when we entered this trade. That's why it turned out to be so profitable. So, what was our return on investment? Well, let's take a look at our original analysis using the risk profile graph, focusing on those October 17th options at the 7.5 strike calls, priced at $35 per contract when we entered this trade. On this graph, our profit or loss is shown here, and the x-axis represents the share price of the stock, which is currently trading over here. And the y-axis shows the amount of profit or loss. Keep in mind, this graph already factors in the cost of the trade. That's why you can see on the blue line that if the stock had dropped down, it would have been a negative $35 loss per contract. But instead, it went up to about here. So we have a profit of $47 per contract. This makes sense because we saw earlier on the option chain that these options were now worth between $80 and $85. Subtract the $35 cost of the trade, and you end up with about this net profit. And so, to calculate the profit percentage, we take the profit of $47 and divide it by the initial cost of $35, and then multiply by 100 to express it as a percentage, and that gives us a return of 134% profit in just one day. In other words, we more than doubled our original investment on this trade. And so, this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information that help them make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, if you want to get access to deep insights like this, head over to our website. We'll put a link up here where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, speaking of the rich, did this wealthy investor close their trade position? Well, as you can see here on the options time and sales tape, these same October 17th options at the 7.5 strike calls were traded again. And based on our deep research analyzing multiple variables and data sets, this wealthy investor closed 4,800 contracts at $70 each, double the $35 they paid originally. That's a 100% gain locked in. But that's not all. Because when we dive deeper into this trade on the option chain and take a look at those same October 17th options at the 7.5 strike calls, we can see that over 22,000 contracts traded in the volume. However, open interest still shows over 80,000 contracts opened, so 22,000 contracts traded is not enough to close them all. That tells us this wealthy investor did not exit the trade completely. They took profits on part of their position but kept the rest open. And that is why we did the same. We trimmed our position by closing some of our contracts to lock in profits and reduce risk, but kept part of our position, as you can see here, marked as POS, which stands for our position with the green color indicating a buy position. This data is important to track because it can help us decide whether to stay in a trade or close out. With that being said, we do not rely on this data alone to time our exits. We go deeper, analyzing other variables and data sets. That's because wealthy investors often hesitate to close positions, as realizing profits can trigger higher taxes. And even if they do close their option positions, they may have simply taken assignment of shares, meaning they're still in the trade, just using stock instead of options. But as long as we use strategies with a strong risk to reward setup, we can maximize profits, minimize losses, and stay consistently profitable over the long run. Take this trade for example. We closed part of our position to lock in enough profits to cover the cost basis of our original trade. That means, even though we're still in the trade, there's no risk of loss if the stock drops back down. This is how we increase our profit potential while managing risks by minimizing losses. And in this case, we eliminated any possible loss while still staying in the trade to gain more profits if the stock moves higher. But remember, this was only possible because we followed that wealthy investor early, back on this day, before earnings were released. So if you missed our previous analysis, we'll link that video here so you can see how we first got into this trade, which made 134% profit in just one day. For deeper access to our strategies, visit our website. We'll link it here. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.